Let's talk about investment. Okay, my name is Deji Abisola, and I will be talking about investment today. About investment. I was doing a little bit of study, and I found out that to invest is actually what it means is to allocate money, or sometimes another resource, such as time, in the expectation of some benefit in the future. I will say it again. To invest means to allocate money or other resources, such as time, in expectation or anticipation of some benefit in the future. So when we're talking about investment, especially when it has to do with finance, we're talking about what you can put your money into with an expectation of returns. So what we normally call ROI, return on investment. The return can come in form of capital gain, or it can also come in form of investment income, such as dividends, such as interest, such as rental income, and so on, or a combination of what we are talking about. So we're talking about investment. We want to find out, what should I invest in? You want to look at what is going to be the rate of return on that investment, how often it's going to come, how easy is it going to come, and how consistent is it going to be coming in. So you can look at a future cash flow, discount them, and bring them to the current value, that's the present value, and compare it with other alternative opportunities in which you can put your money to, and it will be a judicious use. So today I want to talk about characteristics of a good investment. Characteristics of a good investment, and that's what I want us to look at. I have about 7 points. There may be more. So after this discussion, I want you to go to the link below and just type in what you also think are some characteristics that I missed out, or we can also add to this 7 points, because it's not exhaustive, but these are the ones that came to my mind, and I believe these are characteristics of a good investment. The first one, which I want us to look into today, is that a good investment must be secured. Must be a secured investment. So, and now when we talk about being secured, that means you're putting your money in something that you are sure of that it will not go by flight in the night. It will not be something that you wake up tomorrow and you will not see it any longer. Though you are not God and you cannot 100% predict the future with certainty, but what we're talking about is that to a large extent there should be an assurance, there should be a security around it. Let me give you an example. You are investing in a transaction, and the name behind it is an household name. It's a tier 1 bank that is in charge. That's why people take their money and put it in the bank for deposit. They deposit their money in the bank. They are so sure that this money is secured. You know, the central bank is monitoring such banks. Deposit the banks have been insured with NDIC or whichever regulatory organization that's in charge, to ensure that all the funds are adequately insured against losses. So major ratios are put in place to ensure that those banks do not go outside a safe zone for them to put your money at risk. So there's an assurance of security. You are investing in an asset, and the asset is an appreciating asset, e.g. land, or you're investing in gold or whatever. You invest in it and are sure that this is secured. You know, based on historical facts, even if there are shocks in the global market, they can withstand a bit of shock without throwing you off balance. So a good investment must be secured. Find out about the security of that investment. How secure is it? If it's secured, go for it. If it's secured, it is a good characteristics of an investment. So make sure you check out how secure is the transaction. Don't go to a transaction based on emotion. Don't go into a transaction because people are saying, wow, this is what is happening, everybody is doing it, and you want to jump into it. No. Find out how secure the investment. Number two, you need to also look at how profitable is that investment. What is profit? Profit is when your revenue outweighs the cost of such investment. Let me give you a very simple example. You're running an investment, it's giving you 20% return on investment, but you borrowed the money at 22%. That is a loss. It's not a profitable transaction for you. Or you took a mortgage, you're paying a rental income that is far higher than a mortgage is far outweighs the rental income that you are getting on it. It may not be a worthwhile investment, especially if the capital appreciation is not interesting. So you need to look at the dynamics of the investment you are going into. How profitable is it? How profitable? When you talk of profitability, you also look at the ratio, how big, how wide is it? Some investor will give you very little in terms of return on investment, 2%, 3%, 5%. Meanwhile, there are other investors that can give you 15, 16, 18, even 20, 25, depending on. So when you talk about profitability, there is this saying in investment which says the higher the profit, there is always the higher the risk. So when the risk is high, the returns most of the times are always high. So that will now take me to the next one that we're going to talk about, which is going to be risk. We're going to talk about risk. So a good investment must have low risk, not no risk. Some will come to you and say this investment has no risk at all. Such investment, I don't believe in them. That will always be a risk. Even the fact that there is no risk means that the investment itself is risky. So you need to find out how risky is the investment. And the investment risk must be low. Not only should it be low, it should be able to mitigate the risk. You understand? Some investments are risky, but the only way you can mitigate it is that you test the waters. I don't want to in any way endanger more than 2% of my capital. You understand? I want to put 2% of my capital so that I can test it. When it's profitable, I get the profit and plow back the profit. Then I can begin to learn more and extend myself as I move on. So you don't jump into a transaction because the risk is too high, or at times when it is too low, or it is a low risk or a less risky transaction. See, go into it with so much caution. Mitigate your risk. If you have to get insurance, come on, go ahead, get insurance. If you have to ensure that you do one or two things to mitigate that. There are some investments that are risky because you don't know so much about it. So it's a risk that you don't know about what you want to put your money into. What do? Get trained. Get trained. Learn more about it. It may be a very good, profitable, secured investment, but you know little about it, but you can know. You can know. There's nobody that has monopoly of knowledge. Search out on the internet. Go onto the frequently asked question and study it. Study it, and you will know what you need to do to mitigate that risk. Number 4 of a good investment is that a good investment must be scalable. It must be scalable. That means I can start small. When I start small, put a little bit of my money into it, like I said earlier, 2%, 3%, 5% of my capital, I put it at risk and get into the transaction. If I see that I have mastered it, I understand it is good enough for me, return is good enough for me, is secured enough for me, I can mitigate the risk, I can scale it up. I can scale it up. So for some of us who are in internet marketing space, we can decide we want to buy traffic onto a particular promotion. We want to just spend so much money, maybe $2,000, $5,000 to drive traffic to a particular link. As you're working on it, you need to test the water. How can I go in with as little as $200, $100, $55 for me to lock in? Test the integrity of that source. If it gives me good results, what do? I scale it up. So investment must be scalable. Start small, grow it, then it can increase. So it must be scalable no matter how. That's why you see people who do transactions in millions of dollars. They are now coming out daily to find a way of breaking it apart, making it granular, so that people can come in at each different level and then invest in what they want to invest in. So when somebody invests $100, it gets a 20% return on investment. You say, wow. So if I put $1,000, I can get 20% return on investment. They can increase it from 1,000 to 10,000. Then it makes a whole lot of sense. So good investment also need to be scalable. The next one is, which I love the most, a good investment must have passive income stream. Passive income opportunity must be available if you are getting into what? A very good investment. There's capital appreciation, no doubt, very good, but I have learned that cash flow is king. Any transaction, cash flow is king. I've even seen that run transactions to the extent that it's not all that profitable in a term of profitability, but it gives daily cash flow, it gives weekly cash flow, it gives monthly cash flow. You can leverage that cash flow to grow and scale up because it gives daily cash flow. In recession, one of the things that happens is that only few people are able to generate positive cash flow. So what we're looking at is that you must have passive income opportunity. What does it mean? That means my investment should yield for me whether I am working it or not. Not that I abandon it really, but I don't need to be there 24/7. And that's why we said your money is working for you when you are running an investment. Your money is the one that is running it. So you put your money at it, you follow it, you know that you will be monitoring on a daily basis. Just put your eyes on it, hear the news, know when to get out, know when to continue, know when to scale up, know when to scale down. Those are the little things that you need to know about it. But it must give you opportunity, which is going to lead you to the next one. A good investment will give you opportunity to follow your passion. You must have free time to follow your passion. What is your passion? For some people, their passion is that they want to travel the world. Some want to go on mission field. There are people that their passion is that they want to take care of children worldwide. Some want to go back and teach children. Some want to take care of their children back at home. And that's why they put money in investment, allow their money to work for them, and then they follow their passion. Don't get me wrong, some people's investment is actually their passion. So they have to invest in themselves, and they still have to live their passion. So you see them working at it, it's not because they cannot go up, but it is their passion. That's where they express themselves. That's where they find joy. So a good investment must release you to follow your passion. The last one which I want to talk about today is that a good investment must be affordable. It must be affordable. So I'm not saying that there are no big investments that are bigger than you, but for it to make sense to me, I should be able to afford it. An investment like $5 million, and I don't have $5 million. Hey, why am I looking at it? So, but if the organization is able to break it apart, that's okay. Let's break it to 1 million fractions. So a unit is $5. So you can do 200. I can do 500 units. I can do 1,000 units within what I have, so I can afford it. So they've made it affordable for me, and that is when I will be able to participate. So there are a lot of investment out there that you can review. You look at them, just put them onto this test and see whether they are a good investment for you to put your money in, put your expectation on it. Don't get it wrong. Investment is about expectation, short-term expectation, medium-term expectation, or long-term expectation. So I think I will hang it here until I get to see you again, maybe on another training. I think I'm going to talk about value next, and it's going to do a whole lot of good for us as we look at it. I want you to place your comments below to let me know whether you are blessed with this, to let me know whether it makes sense, to get some feedback and addition from you so that I too can learn from you. Till I talk to you next, my name is Deji Abisola. Remain blessed.